Let's take a look at filling out the interest and charitable donation sections of the Schedule A. So here, this is on charitable donations, and we have an example. And just like with other sections, you first have to figure out what is actually deductible before you can worry about what lines is it going to go on the Schedule A. Now here we have Clem donates $12.60 to his synagogue's youth group. Now this would be cash that he's donated to a church, a religious organization, and so that would be a 501c3 group, and it's cash he's donating. The synagogue would have to give him a statement at the end of the year showing that he had donated this amount of money for him to be able to claim it on the Schedule A, but it would otherwise be deductible. He also allows the youth group to use his lake cabin, and that's valued at $500. Maybe they used it for a big picnic thing or something. Well, using your property for free instead of charging them is not something you can take as a deduction. So you would not be able to use that $500. Clem drives 1,000 miles for the YWCA, and that is allowed. So, if you're driving to and from somewhere where you're donating your time, your actual time is not deductible, but the mileage is deductible, so that would be okay. And he donated a vehicle valued at $950 to United Way. United Way then sold the car for $750 and issues a 1098C to Clem that shows $750 is what they sold it for. Now, if he had donated a vehicle and United Way actually used the vehicle for their own people to drive around in, then he would have been able to show it at $950. You would have to have some reasonable way to show that that was in the Kelley Blue Book or something like that, where he got that number and he didn't just pull it out of the air. Okay? But if United Way is not using the vehicle for their own people, then he has to wait until they sell the car and issue this 1098C for however much they sold it for, and that's how much he can deduct, the $750. Okay, they tell us his AGI, and that's because all of these things that he gave to were all considered 50% organizations, so he can donate up to 50% of his AGI. And of course he has donated far less than that, so we don't really have to worry about the AGI. So we look at the solution. The $12.60 is deductible, the 1,000 miles is deductible, and the current rate for that mileage, by the way, is 14 cents a mile. Okay, and the $750 that United Way sold the auto for is deductible as a contribution. Okay, and so the total of those things is $2,150. Okay, and so out of that, $12.60 is considered cash, and the mileage and the $750 are non-cash donations. Okay, so let's go ahead and put these onto the Schedule A. So here we have our itemized deductions, and of course his name and social security number would be at the top. If he had any medical or taxes, he would have filled that out like we did in part 1 of the Schedule A videos. Okay, the next section is interest, and we'll cover that in a minute. And we get down to gifts from charity. Now it's divided out into several sections. Line 11 is gifts by cash or check. If you made any gift of $250 or more, see the instructions. That's going to tell you you have to have that written statement. So he had cash deductions of $12.60 to his synagogue, and we're going to have to say he would have to have a statement from them from the end of the year that showed that as being the amount of cash donations he made to them. Line 12, other than by cash or check, so non-cash donations, which would include the mileage, and it would also include that car. If you made any gift of $250 or more, see instructions. Okay, and so the car was $750, so he is going to have the paperwork, which of course he got sent a 1098-C for that amount, so that would be the paperwork. He'd need to keep a hold of that. And then the other thing was the mileage, which was the $1,000 times the 14 cents a mile is $140. So that is that's less than $250. However, for any time you're doing mileage, whether it's mileage for medical or mileage for your business or mileage for donation, you need to keep some kind of record of the mileage, like in your vehicle, so that if you were ever audited on this tax return, Clem would have to show that he recorded, that mileage down, so that he didn't just pull that number out of his head. Okay, so we have $140 of the mileage, and we have $750 of the car, and that is $890. And so here it says you must attach Form 8283 if over $500. Okay, so we'll take a look at that. Line 13 is carryover from a prior year. If your donations are more than half of the AGI, then you can't take it that year, but you can carry it over to a different year. Okay, so here we have $12.60 and the $890, so we have a grand total of $21.50 that is going to go on line 14 for our contributions. Okay, let's take a look at the interest section. This is a big, long section. Okay, I do not have an example in the PowerPoint show, but we'll just make one up. Okay, so line 8 is about home mortgage interest and points. Now you can use this line 8, A, B, C, D, and E for a home that you live in, is your primary residence, and also for a secondary home. So if you have a vacation home, and that can even include a boat. You have a boat that you sometimes live on. So any mortgage loan that you are paying interest on for either one of those two types of homes would be included in here. If you have a house that you rent out to somebody else, that does not go here. You would still be able to use that mortgage interest, but that will go on Schedule E with your rental income and other rental expenses. Okay, so this is for the house that you live in, your personal house or houses. Okay, and the interest and points is often charged by a financing organization at the beginning. So 1 point is $1,000. You usually have to pay that up front. And so that's like prepaid interest. Then plus whatever interest you're paying along and along every year, as you pay each payment on your mortgage loan, part of that payment is interest and part of it goes on the principal. So that interest and the points are all going to be given to you if it's a financial lending organization, a bank, something like that, where you got the mortgage. It's going to be given to you on Form 1098. So here's letter A, 8A, the home mortgage interest and points that are on Form 1098. So let's say that Clem has a house and he has mortgage interest and it is 40 to 50 is how much interest he paid, and it's on a Form 1098 that the bank sent to him. Okay? Now here's letter B, home mortgage interest not reported to you on Form 1098. This generally happens if you borrowed the money from an individual. Sometimes this person who sold you the house sets themselves up to be like the banker, and you make the payments to them. And there's different ways that can be done. But in either case, if the seller financed that mortgage, then they have to keep track of how much of every payment is interest. And they're not going to send you a Form 1098. Those rules are only for like banking and financial institutions. So this individual who happened to have sold you the property is collecting your payments. They're not required to file a Form 1098. You have to give their name, their address, and their social security number. All has to be listed on this Schedule A, okay, to show who you paid the interest to. Okay. Letter C, points not reported to you on Form 1098. If there's any points that you paid to this individual, then, and there are special rules for that, because typically that's not something you'll usually see when an individual finances the house. Okay, but if there was anything that fit into the rules, you would put that in line 8C. Letter D, mortgage insurance premiums. This would be on your Form 1098 as well. That's not going to be from an individual. What happens is that oftentimes a bank will require you to put a 20% down payment for the mortgage. And if you don't have a 20% down payment, then sometimes that can still be allowed, but you oftentimes have to pay a mortgage insurance premium. This is you paying for an insurance policy that if you end up defaulting on your mortgage, then this insurance company will at least pay the bank so that they at least got the 20% down payment that you should have really done. Okay? So you have to pay for that insurance. If you are a type of person that always pays your bills on time, you have a decent credit score, then